Welcome back to another Capitals Convo. We are back with Mark and Drew, the main man, Mr. Mark, and our special guest, Drew. I think he's not even a special guest anymore. He's become a permanent member of here, as has been requested multiple times over and over again. Drew does provide a lot of value. In fact, you know what you're going to do? Smash the like button before we start this off, because you know what? We want to get as many likes as possible for Mr. Drew on here so that he keeps on coming back as he's been shown the love to come back as well. You know, I'm sure if we were showing him hate, he'd definitely turn around and walk the other way. But because we keep showing him love, he keeps coming back. And we are so grateful to always have, you know, this other member with us as well.
We interrupt this program to bring you a special report.
Introducing Capital Convos.
So today, in fact, we're going to go straight into it. We got a few things to discuss, which are very lengthy, in fact. So one of the main things that we are going to talk about today is the GME short squeeze situation that has been taking place recently. So what I'm going to do is hand it over to our special guest, in fact, Mr. Drew, who will get started with that topic. So Drew, what is your takes on this GME current short squeeze at this moment in time? And do you see it, easing itself out? Like, in fact, some viewers on here don't even know what it is. So in the first place, explain what it is, and then, give us your take on it.
Of course. So a short squeeze, essentially, it happens. It's very rare in market occasions, and almost like one in a century sort of situation. And it's a situation where retailers or not the sort of institutional side of the market find out that, or it becomes apparent that a lot of funds and a lot of institutions are net short on a certain position. Now, of course, your upside potential is scary. If you're net short, you're more exposed, essentially, in the eyes of. And to sum it up, it's when there's a certain supply of a stock and people bid up this stock, or in this case GME, and this equity, and they bid it up. And when there's no way of getting out of this short position you're in, you just accumulate more losses and losses and losses. And it's very rare that a fund or an institution's caught wrong-footed in the market. But when it does happen, it happens hard and it happens aggressively, And this is why companies or funds like Melvin Capital have you've seen like a 13.5 billion fund go bust. So essentially, there's X amount of supply in the market, but there's a major amount of demand. And the demand will push the stock and the price of the stock up. And the people who are short this stock physically cannot get out of their position. And this results into all sorts of mayhem. So, for example, I think that Melvin Capital, they required a 3 billion loan they took out or they acquired the capital for 3 billion that they've lost already, trying to get out of this position and trying to liquidate themselves. So yeah, to sum it up, you've got an asset. That's the value of the asset, for example. This is where the funds are short in this asset, and then it gets bid up. They can't get out of the situation. They just accumulate losses. And essentially, it's poor risk management. And it's also a very rare occasion in the market that things like this happen. But, and the reason it's rare is because it's the first time in a long time we're seeing retail traders basically say, well, F you to these institutions and to these funds. And it's a way of retail traders stinging the funds back for all the losses these funds accumulate and institutions accumulate from retailers in the last 10 years and whatnot. We're seeing this on GME. We're seeing it on things like Nokia, BlackBerry, even Build-A-Bear. Build-A-Bear, the stock has shot. It was 50%.
I've noticed that, in fact, absolutely. I've noticed that. Like, it grew so much. It's a bit up and down, and then suddenly, there's a massive rise in it over the last day or so.
Yeah. Absolutely. And basically, this is simply a short squeeze. So once a short squeeze takes place, it's usually like a pump and dump. When this dump will happen, we don't know. But right now, it's pumping. We're seeing percentages that don't present or don't resemble true value. And that is stock manipulation at its finest. And the saddest thing about this is, which we'll get onto, I'm sure, is you're seeing platforms like Trading 212, Robinhood, where people have been buying GME and BlackBerry and whatnot, and you're seeing these platforms turn around and say, we refuse to, or we suspend trading of this certain equity. And now that is some old school bankers and some old school fund owners calling some favors to basically say to the platform, can you stop letting people buy it? And the only thing people can do then is sell their position. And when people can sell their position, this is a chance for funds to get some supply into the market and to liquidate their losses. So that's the situation with a short squeeze at the minute. It's very interesting. It's historic. This will be looked back on it for years to come. And it's one thing that retailers can actually sit back, smile upon, and go, we've done the institutions for once. We've done the hedge funds over. It's our time to shine. And I'm sure, as I was saying to a few friends of mine earlier, I'm sure what these big funds will do, they'll just liquidate, then they'll start back up again, and they'll go again. Just like any other, you get back on your horse and you carry on. But that's a short squeeze in essence. You've got a supply of something, the demand is way above the supply, throw in the price of it sort of north, and unfortunately, the people who are caught short really do suffer.
Yeah, I totally agree as well. I didn't even know that's legal.
Yeah, I didn't
to
think
do that in the first place. Stop every other broker allowing retail traders to stop buying or stop selling, for instance. Just stop. Let's just say any kind of institution contacting a retail broker telling them what to do should not be in the books in the first place. They should have their own agendas. They're making enough money, unless obviously it is called in as a favor or they've paid a lot of money to make that happen. They're offering them a bribe. A lot of this does happen behind the scenes, especially in the institutional world, which I was surprised at first, but a few years ago I started to realize how dirty this game actually is. Like, it is so dirty. Yeah, there's more, let's say, crime taking place behind the scenes, more fraud taking place behind the scenes than probably out there in terms of credit card fraud, for instance. Yeah, there's more fraud happening in the banking world than there is in terms of credit cards fraud and online scams and things like that. There's way more going on in the institutional world, and this I wouldn't call it a scam, but it essentially could be hidden as a bit of an illegal activity to do.
Yeah, absolutely. And I'm just checking a few things here. For example, it says on the Robinhood app, you can close out your position in this stock, but you cannot purchase additional shares. So that things like this, and the owner of Stool, I know, I'm sure many viewers out there know the owner of Stool. He tweeted, "If I will burn at Robinhood app to the ground if they shut down free market trading," because essentially that's what you're doing. They're removing people's ability to capitalize on one of these rare occasions where funds are getting absolutely done over. And unfortunately, and how this is how the financial markets work, usually 95% of the time the funds are doing the retailers over. And this is unfortunate for the funds. It's fair game, it's fair play. You were caught wrong-footed, deal with the consequence, and poor risk management, deal with it.
Yeah, 100%. I totally agree there as well. It's just a money game, really. The more money you have, the more power you have. Money talks, definitely, in this industry, exactly like property as well. There's a lot of industries that are like that. No emotions involved. It's just straight. How big are you? Are you able to go up against me? Yeah, yes or no. If the institution is able or has bigger capacity to take over the retail world, as we all know, that is the case. Yeah, there's no retail out, the retail world out there is nowhere near the size of the institutional world. In fact, institutions even run the retail world at the top, especially. They're institutions as well. They're just, milking it downwards.
Absolutely. And an ex-banker from HSBC tweeted, "Today, hedge funds called in favors to have trading shut down for specific companies across several giant platforms so they could buy time to gather in private to decide what to do next. If that's not market manipulation, I don't know what it is. Sort it out." And that sums it up. And when we take losses as retailers, or so to say, compared to JP and stuff like that, when we take a loss, we can't just say to our broker, do me a favor, pause that position, and let me just go speak to a few of my mates before I decide what to do. We have to deal with it. It's the risk you take upon your shoulders when you step into this game. It's the risk you should be prepared for and educated yourself on, or invested in yourself through others and whatnot prior to making those decisions. And unfortunately, when you're at the top of the game and you've got the capital, and like you said, money talks, and you've got the power behind you, you can just say to these platforms, whoa, stop what you're doing. Let me figure out what I'm going to do. So, and that is sheer manipulation.
Yeah.
100% agree. Mark, what do you think?
To be honest with you, let's say what I'm thinking now let's say you're a massive fund manager out in the States or wherever. I think now they're starting to clock on that retail traders can actually make a big difference. I think they might be a bit afraid because Wall Street Bets on Reddit, who are the people who basically sent out by GME, they have some millions of people in that subreddit. And I think hedge fund managers now, and also I know the stock market especially has been watching Wall Street Bets because the power that they actually have now, if millions and millions of people are buying GME or it's like you see all these discords for buying like cryptocurrencies, like the pump and dump. I think now if you're like a massive like $1 billion hedge fund manager, I think they might have some fear now that at any point they could just get wiped because Wall Street Bets could clock on and be like, okay, well we're going to buy this and you're shorting it, and then
absolutely, and then it just goes to show. Sorry to butt in the sharp market. It just goes to show though that that although retailers are not frowned upon but seen pushed aside compared to institutions, and you always hear about these acquisitions or X amount invested into this sector and stuff. When a community comes together and puts all the capital into one position on a global basis, you can take out multiple hedge funds and institutions because you and essentially you're just trolling these these hedge funds. Sorry, but it just goes to show you have to be on point. But my advice to anyone especially in the equities game moving forward would be, now all eyes are on GME, Black Green, Nokia, things like this. What you want to start doing is looking at the equities and stocks no one else is looking at, because the volume on those have died down. No one's looking at them. They're in dark at the minute. And the ones with true value, and the ones, if you look at their balance sheets and things like this, and the ones that will generally rise over time, aren't being looked at the minute because the whole market attention is on something else. So let the noise be noisy and go to where it's quiet and make your wise and clever bets or position yourself properly and adequately, and just let this noise pass, because trust me, this boat has sailed.
Yeah. I totally agree. They can pretty much do. It's at the end of the day, it comes back down to what I mentioned again. It was the money aspect. The more money you have, the more powerful you are in this game. The more buying power you have, and other institutions or even hedge funds can be. If it's a single hedge fund going up against the rest of the institutional world, they're finished. Yeah, they're fucked, basically. There's nothing else they can do unless they also join the boat as well. If they move in, into that big circle as well, where everyone is, pumping and dumping together, they will make sure that they're on the right side of it. And I'm sure they would want to be, because they have a lot of gains to be made. They can't afford to take any losses, especially the amount of capital that they're dealing with on a daily basis, on a weekly basis, on a yearly basis, how much comes in to their funds in the first place. It does, take a big hit on those institutions that aren't really following, that are just trying to do things, let's say ethically, for instance. Ethics is what I learned does not work in this industry too well, especially when you go towards the top. I've seen it myself. I've seen so much happen, and even that then is when I realized, I'm a bit scared, or not scared, but I'm going to tiptoe into this institutional world rather than just go straight all out into it. So I tiptoed into the institutional world, was new to everything, never got involved in too much of these, let's say, insider information is always amazing, isn't it, guys? Yeah, but can't complain about that. But that's the benefits of it. But I didn't want to get too caught up in like what they're doing, rounding up large institutions and hedge funds and grouping them all together, and all placing bets at the same time, or positions at the same time, based on what other people are, let's say, essentially driving prices into, driving money into. assets, different assets a lot of people and institutions are driving the money into, rather than actually following the proper way of trading, which is fundamentals and technicals and data.
Yeah, absolutely. And I think both myself and Ad's sort of, and I'll quote you there, tiptoeing into the institution world. I think we've, and relating it to ethics wise, we've kept it very simple from a stance. We deal with our clients and our clients only, and we manage capital ethically and appropriate with their best interests at heart and our best interests at heart, and we involve ourselves with nothing else. and that's the best way you'll keep your everything, your hands clean, your books clean, everything, is when you do it properly. And it tends to be the longer way about things. It tends to be the long-term gain and the slower way of articulating yourself around the markets, rather than just jump on the bandwagon. But it's ethically correct. You'll make your money long-term. Your clients will make money long-term. There's no bumps in the road from a questionable stance. Everything's just as it should be. And unfortunately, temptation is a devil, and funds that are dealing in significant amounts do get tempted by other funds. Oh, where are you positioning? Well, we're positioning here. All right, okay, cool. Fancy go for a game of golf or a round of golf, and then all of a sudden, so yeah, the best way to, and this is from an institutional stance, but the best way to articulate yourself is to just keep things clean.
Fancy a game of golf?
I mean, yeah, I mean, as I said that, I thought, well, I don't want to hide those clubs,
Yeah, no, definitely we do need to go golf again soon. I hope things do start opening up very soon as well, that, because I've noticed this is also driving a lot of people mad. This lockdown, especially compared to any other kind of lockdown that we've encountered.
Yeah, I tell you why that is, in my opinion. The first lockdown we had the weather with us, so it was summer, so you could still go out for a walk, enjoy yourself, go out in the garden or whatnot. It was manageable because the weather was nice. You could sort of chill out, and it was the first time people were given a lockdown where they just sort of backed off and could recharge, basically. Second lockdown, we were heading into Christmas. There was things to look forward to. At least some people that traveled home, they were with their family and whatnot, so you had something to look forward to. But now in this third lockdown, with real bad weather, start of the year, and it's the most severe one economically, people being made redundant left, right, and centre. I think this one is the most severe one, given that there's nothing to look forward to. The weather is bad. It's been a prolonged sort of, we're locked down till this date. Oh, we're extending. There seems to be no end to it. Whereas I think there was a bit more. It was shorter, sharper for the Christmas one, and I think this is just this is the longest, most severe, and the variable factors around it are definitely making it a lot worse.
Yeah, definitely. I totally agree with that as well. There is no end to it. Apparently, he's even looking to extend it even further to July or June, for instance. First it was supposed to be end of February, but now he's explaining that Boris Johnson, by the way, not if anyone wondering who he is, Boris Johnson. So he's looking to extend it even further, like I mentioned, to June, July. Now that is a very long time to just stick indoors, especially as humans, we are free characters. For us to excel the furthest, we need a free state of mind, and that's where we're going to go.
In Mauritius as well.
Wow, yeah,
Mauritius in June.
So many people are in Dubai right now. I've been invited to Dubai as well, so much, and all sorts. But that brings us on to our next topic. In fact, mindset. How to strengthen your mindset, how to build an investor's mindset, in fact. I'll give it to Mark first, then Drew, and then I'll take over from there.
So, how would you build an investor's mindset? So obviously, you got to understand that in trading, everybody sees the market from a different perspective. So I like to look at it long-term. So I used to be let's say per se day trader. I used to go on the 1 hour charts, the 45 minutes and get in and out. But as time has gone on and you have more confidence and you actually just look at the markets from a different perspective, you tend to go into a direction that suits your lifestyle. Because obviously when I started to learn to trade, I was at uni. So I had a decent amount of time. So first year I had lots of time. So I was always on the charts. Second year, I wasn't as active on the charts because obviously second year is quite stressful. And then third year is obviously even more stressful. So you tend to adapt how you trade to your lifestyle. So obviously, let's say, for example, you have a 9 to 5 and you work hard. Let's say you have a job that you do 9 hours, okay, 10 hours, a long, hard job. Are you going to be able to be on the charts for every hour of the day to get in and out? Not necessarily. Would swing trading be more suitable for you? Yes. Reason being because obviously you can set your buy and sell limits or sell stops and buy stops and just hold it, because obviously if you've done all the data and you actually say, okay, well, I want this to go up and I'm going to hold it for 2 months, that's going to be perfect for your lifestyle. Whereas somebody who has a lot of time on their hands and they really enjoy trading, are they actually going to be suitable for that? You know what I'm saying? So it's all about just adapting what you are as a person, so your personality, to obviously your lifestyle, and then from there you just build on that. That's obviously how I personally built my trading lifestyle, and trade mindset as well, because obviously it changes all the time. But I see myself now as a long-term position type trader. I couldn't personally go back to scalping anymore, just because it's just not my personality anymore. It used to be, but you just build on that. What do you guys think?
Yeah, absolutely. I think when I'm discussing mindset and with regards to trading and investing, I'd first touch upon the variables that surround that mindset. So I'm going to look at things like your circle, who you surround yourself with. Second of all, your habits and your day-to-day, how you go about life. Third of all, and I think I want to emphasize on this, your current state of understanding. So what you understand as of yet, what is correct, what's incorrect, how to go about life, and that will always adjust. And finally, sort of your experience in life as up to yet will always affect how you look at things. So first of all, your warm circle. I think the people you surround yourself with is very important. And I've got friends who are absolute jokers, and I will go to them and I will just have a laugh with them, and I won't speak one word of business with them. And then I've got a close group of friends as well that business is primarily the main topic. We enjoy how's your business? How's your business? We also enjoy speaking about developments, mindset developments. But I found out the other day, I work better at these times because I just seem to be more calm after I do my morning emails or whatnot. So, and I'll give you a prime example. I met a young gent recently doing really well in the property game and things like this. And as soon the first time I met him, I could just instantly see, in his eyes, very driven, very understanding of what's going on sort of globally around, he understood his macroeconomics. He's not even a trader, he just knew this is going on around the world, things are presidencies in America and things like this. I could just completely understand his outlook on well, globally, and not just that, how it refines into his markets and stuff. And I thought, wow, I would appreciate spending time with you, even from a stance, outside of business and in business, because we're going to learn from each other. And I think it's very vital to appreciate those people who are around you, because that will inevitably, without you knowing, subconsciously affect your mindset. Second of all, habits, day-to-day habits. If you're a person that, and there's, I'm not going to sort of call anyone out here, but if you're one of these people that get up at midday and then you're, asleep early hours in the morning, nothing wrong with that if you adjust it to how you'd like to trade. I know Mark's giggling there, but there's nothing wrong with that if that suits you, and you've understood that how you're going to articulate your investments and how you're going to bring your opinion to the market suits your lifestyle, then carry on. And that brings me on to the second bit. Obviously, habits, we'll touch back on that. Or the third bit is know yourself. And I spoke about this in the 2 podcasts previously to this. You need to know yourself. Are you someone that has hot fingers and doesn't want to hold a position more than a few minutes? Some people, a few hours, some people. But you need to know yourself in order to articulate yourself and to basically self-manage yourself. I know I've said yourself about 15 times then, but you really do need to basically understand what you as a person are, what your traits, your characteristics, your habits. And the more you get to know yourself and the more you trust in yourself, the more you'll trust in your positions. And all that will come from positive habits, positive outlooks, and just small tweaks in your life that you will make along the course of your life, and which will affect your current state of understanding and you'll slowly start to respect yourself and create a mindset that you feel that you look upon as invincible, because you'll be like, look, I trust myself. I know what I'm doing. I know who I am. I've got this sort of thing. And slowly that will reflect in your trading, reflect in your decisions, reflect in your analysis. And not just that, I think it reflects in everything else. You tend to have a more positive outlook on life, a more positive reaction to negative situations, whether it's family, friends, bills, whatever. You'll be like, it's okay, I can manage this. And that's because you have a positive outlook. So it's all about building those micro steps in your mindset to have one big macro sort of solidified approach to life, I think. And if you've got a good approach to life, you have a good approach to charts.
Definitely, I totally agree, especially with the habit side of things as well. Success is built in your habits, in your daily habits, what you do every single day. And, as Drew mentioned, it is compounded towards your success. What you're doing right now, every single day, results don't show overnight. Yeah. I'm quite passionate about this topic as well. Like, because I'm definitely one of those people. I wish that it, came overnight. I so wish I wouldn't have to go through all those hardships, all those times where I felt like giving up, all those times where I just felt like I was constantly hitting a wall and then bouncing back off the wall. And then again, that same wall is in front of me, hitting it again. It's like, how many times am I going to hit this wall? Am I going insane? Yeah, it is all built up in your daily habits. The stronger your habits are. But this brings me back to discipline factor in once again, which I also mentioned at the beginning of this week, is discipline. Every successful person out there is disciplined in some way or another, where even if it comes to the first thing of the day, which means waking up on time. Yeah. Are they disciplined to wake up at a certain time every single day? Or are they disciplined to, have a meal at a certain time every day? Yeah. Or are they disciplined to just, do their certain steps every single day? Those few things that they tick off every single day. Like myself, for instance, I make sure that I have to read some sort of book every single day. Yeah. Currently, I'm reading Mastery, which I've read, twice already, and I'm reading it a third time now. And I have to make sure that I read, a certain few, even if it's for about half an hour, even if it's only 20 minutes, I have to make sure that I read at some point every single day, whether I'm going to sleep, whether it's in the morning, whether, it's a few middle of the day. I have to make sure that I read, gain some sort of knowledge every single day without fail. Yeah. And at the end of the day, look, we're all human. You don't have to robotize your daily habits. You don't have to have a set time to do certain things. Just make sure that it gets done. Yeah. Regardless of what happened, it gets done. Like, I know Drew has the saying, get shit done. Yeah. Like, he is the get shit done kind of man. At the end of the day, yeah, he sometimes he doesn't take no for an answer. He will find a way to get it done. Yeah, like that is the way to have that kind of mindset. In fact, will build you towards the success that you are looking for. And in terms of investing, I say the first place that you should invest in is within yourself. Yeah, because, and I'm telling you this from experience as well. Yeah, when you're investing in yourself, let's say it could come down to your health. If you just invest in those slightly better, it could even come down to choices with your health as well. You don't have to even put money into it. Yeah, just choose not to have that extra spoon of sugar in your coffee in the morning. Yeah, instead of 3, have 2. Yeah, that one less spoon of sugar could benefit you in so many more ways in the coming future. It doesn't have to be right now, but it will benefit you in the next 10, 20, 30 years to come. Yeah, so many different things. That one less donut that you're going to eat at night, for instance. Yeah, we all love donuts, we all love our desserts. I love desserts, but I don't eat them every day. Yeah, so it doesn't even have to be money wise. It could just be simple choices that you're making. Yeah, and everyone has a choice at all times in life. You are all given choices, in fact. Like, we have a choice, in fact, to postpone this till tomorrow or the day after if we don't feel like it. But we decided, you know what, we're going to make this happen no matter what. In fact, I was even late earlier, but I made a choice that I'm going to make it home rather than stop off along the way, get a coffee, get a munch on my way back. I have something to do. Yeah, I'm going to make sure that I jump on this podcast regardless, without fail, every single week. And I've set myself a time, regardless if whatever tries to hold me back, I'm still going to make it without fail. So that's the kind of mindset you need to have, a no excuse kind of mindset. I know Drew wanted to say a few things. Go on, Drew.
Yeah, I just wanted to reinforce on that get shit done. And it's the hardest bit about getting shit done is the mindset before you get it done. That's the hardest bit, is getting yourself there, getting it done. I guarantee 90% of people watching this will sit there and go, do you know what? There's been countless times I'm like, I don't really want to do that, or that seems a bit long, and that sounds like it's gonna take so much effort. And the minute you get into it, it's actually not as hard as your brain was building it up to. But the fact that you stood up and you got on with it is what makes it easy. So I'll give you a prime example. A student of mine recently, sort of a mental block, his account wasn't going above a certain level, and he was like, I'm really struggling to, it's like a psychological barrier. I said, okay, cool. What you're going to do is, I said, just trust me on this. For 1 week minimum, what you're going to do is chuck in a freezing cold shower the minute you get up in the morning. So he wakes up in the morning. He's up every morning.
Wow.
He's up early anyway. And he got up and he jumped in this freezing cold shower, and he said the first 2 days horrible, and then he starts to like it, and now he can't get enough of it. And what it does, it almost shocks you into, okay, right, I'm alive. I've got a day to do something. We all have the same 24 hours in our day, whether it's a bad day or a good day. It's only going to be 24 hours. So optimize on it or change it around. And yet implementing those small little changes and getting shit done will lead to bigger shit getting done. And that's the bottom line of it. And I think from my personal experience, it was when I first started out with and I was, as I'd said, sort of making myself a robot at some stage. And I noticed that I was so time efficient and so almost addicted to, I need to get that done by that time. And I've learned now that isn't the mature way about it. But what that has instilled in me is, naturally, now that I force myself to be like that for X amount of time, I do it naturally now. I don't think about it. I get up, I know I got to get this done by that time. I know I have to have, I know myself, I need to get those 2 coffees in before midday, and that's a terrible habit, but I know I function really well from there on. It's probably a mindset thing. Yeah, it does. It does. And I could probably go without it, but it does push me into, right, okay, now I can get shit done even more. And it's just, the more you implement discipline, the more the discipline becomes easy. And then you get your ticking boxes left, right, and center. By midday, by 1, by 2 o'clock, you've smashed things you wouldn't have done in 2 days before, because you've set out a time frame, you've given yourself targets, and you work and you measure yourself accordingly within it. Okay, you run 10 minutes over, but maybe that 10 minutes was vital to get that task done. So could you get this one task done, maybe a bit, cut that task down a bit more, and just be a bit more time efficient with yourself. And I promise you'll get 2, 3, 4 times as much done in one day. And all of a sudden, what you would do in 1 month, you're doing in 1 week. And all of a sudden, your life will just progress and progress, and it will snowball into something great.
Yeah, absolutely. Like, going back to the time efficient stage, in fact, and that topic, I totally am one, definitely, who is I'm definitely a human being who values time heavily. But it's not just myself. I built that over time. Yeah. And I realized this from watching other successful people around me. Yeah, I'm glad now to have a good, successful group of friends around myself. Everyone is winning in some sort of way, whether it's small, whether it's large. No matter what is happening, everyone is winning in some sort of way. So going back to Drew's other point right at the beginning, it also matters on the people you have around you. If you have a lot of people who put things off, you'll end up putting things off all the time as well. Saying, oh, I'll do it later, oh, I can't be bothered. Those words will start sticking in your head as well. Yeah. You'll start to say those things about important things, that you've got to do in your day and in your life. Now, going back to time efficiency, one thing from studying successful people, I'm, nowhere near where I want to be yet, but other people, would say that they would rather be in my shoes than any other shoes, which is fair enough. However, before I even got here, I was researching other successful people, yeah, and learning their habits and learning, their traits and what they find important. And one thing I can definitely say, and they prioritize, is time. Yeah, there's a difference between the successful people and the non-successful people, and like I said, the difference is mainly to do with time efficiency. They value their time. They're not willing to give it away. Look, investors, this is what they want to do at the end of the day. Yeah, I deal with a lot of investors at all times. I've been dealing with investors now for the last 5 years. Yeah, on a daily basis as well. So what I've noticed is that a lot of them want to place strategic investments in certain areas where they can get paid without having to put in the time themselves. Yeah, they want as much time as possible to themselves. Yeah, Meaning, if they place this investment in here now, yeah, they will make sure that this investment pays them for as much time comes along as possible. Yeah, whether it's in the next year, or whether it's in the next few decades, or whether it's in the next few generations for them to come. Yeah, are they leaving it there for their kids? They're going to put everything strategically into certain investments based on how they value their time or how they see their time. And what another thing that I see is very, very valuable to them is family. So what they use with their time, and what they're saving with their time, for instance, they spend with their family instead. Yeah, hence I've started to build that up with myself over the last few years. In fact, you know what, and this is very true, I actually wasn't a family person, let's say, growing up in my teens, but I believe everyone was like that. Yeah, in your teenage years, you just want to be left alone to do your own thing, learn how life is. You're like, Mom, stop telling me, man. It's all right. That's not that bad. Yeah, Dad, stop telling me, man. Just let me do my thing. Oh my God, my parents are so annoying. You know what it's like in the teenage years. Yeah, but then you start to realize, you know what, as you grow older, what they were saying is actually true. Yeah, your parents, noticing certain people around you are not good, they tell you don't hang around with that person. You realize later on in life they're right. Yeah, and you start to understand, family really, really does matter at the end of the day. Now, I'm going a bit off topic, but coming back onto it, time efficiency, like Drew mentioned, is very, very important. And I was one of those robotic people as well. I'm not going to lie. Yeah, for a few years, I was just really robotic, just at it every single day. Obviously, there were a few off days where, I couldn't, yeah, or I didn't want to do anything, which is fair enough. We're all human at the end of the day. Yeah, we're not all robots. We do have emotions of our own. We have things to do, things come up, things, happen all the time in our lives that we have to deal with on, not really on a daily basis, but on a weekly basis. Things can pop up at any time. Yeah, emergencies pop up at times as well. It is what it is. It's life. So don't hit yourself in the back, or stab yourself or kick yourself, if you're too worried about, not doing all of your tasks in a day, because I write to-do lists to this day and still not everything gets done. But as long as the majority of my stuff is done, that's all that matters. Yeah, the most important tasks is what I prioritize towards the top. And I try and get those most important tasks done towards the beginning of the day. So the rest of the day is a lot easier to carry out.
Yeah, absolutely. And I think just bringing it back to, I know the topic was linking this with trading and investments and whatnot. A lot of people are probably watching this and saying, well, that's not to do with my stop loss, or that's not to do with my take profit, or that's not to do with how I enter or exit the market and things like this. But what's most important to remember here is we're not saying trading is a one frame psychology. It's a multi-dimensional thing that goes on in your head, and you have to understand that every little variable around you will inflict something into your brain, whether it's something going good with your family or bad, or good with your friends or bad. And what you have to do is rise above this, have a clear mindset, and be able to see what is good for you, what is bad for you, how to manage the bad to make it good, if the good is really good, it's not going to be amazing forever. So how to expect things to sort of pull back and whatnot. So I think the main thing to take from this is trading and investing isn't just, okay, I feel good today, I'm going to step into markets. It's everything every variable around you have to try and balance in the perfect manner, whether it's, like we said, time efficiency, discipline, how, even to your risk management, and then your discipline with how you respect others, how you respect yourself, how you go about your day-to-day life. And one thing, a prime example, and my business partner taught me this. He said, look, and I used to get terrible road rage. He said, look, if it's not going to matter in five years, why are you letting it bother you in 5 minutes? And so now, so many things in my life I let slip because I'm like, that's not going to bother me in 5 years, right? I'm not going to let that affect what I've got to get done in the morning. Say you bicker with your missus, or you bicker with your mother, or whatever. Okay, cool. Bickers happen. People have these little disagreements. I'm going to let that slide. We'll make up later. I've got shit to do. I can't let anything affect this to-do list, because if they don't get done today, they're going to push on to tomorrow, and that means tomorrow is going to be squeezed, and that doesn't look good on your or doesn't feel good on your mindset. So basically, to sum up from my stance, is make sure you can balance everything and bring everything to an equal level so you can move forward in one steady progressive rate.
Yeah, Mark, you got anything on that? The back
I was going to add on to the your circle. because you always hear they're saying your network is your, no, what's the saying?
Your network is your net worth.
Yeah,
Yeah.
that's the one. Yeah, I was going to tell you about a story, because obviously we all have friends, whether they're into business, trading, property, cryptocurrencies, whatever. Because obviously, when at the start of university, when I went to university, I obviously studied sports therapy, and I made a lot of good friends there. But I was always getting pulled into this kind of mindset of going out every week, doing drugs, which I don't recommend, just doing a load of rubbish and not getting work done. So obviously my first year grades were decent, I'd say they're decent. I think I got like 65%, 70%. So they were pretty decent. Second year is when it like started to slip, because obviously you go from the low, like when you come into uni, to then pushing up to your grades getting good, because first year is easy. And then second year starts to dip, because obviously the network you're with are always telling you to go out. Let's go out to Studio 338 next week. Let's go out to this place, when you've got so much coursework to do. And they're bringing it back onto that time management. University is probably the best way to actually understand to manage your time. If you go to uni, you understand what I'm talking about. Where if you leave your assignment, I'll do it next week, I'll do it next month, it's not due till 3 months. And then you'll keep saying that. And by the time it gets to the deadline, you've got about 4 assignments to do. And at that point, it just goes downhill. That's when you see a lot of stuff in your life start to go down, because you start to become more stressed. So it's all, again, just added on, just all about that risk, that hanging around with people who actually are going to benefit you, and actually managing your time well. Because I'm not saying it's easy. I myself, I'm not a good like time manager. I'll prolong stuff, but I'll get it done. But I'll always get the important stuff done first. The big jobs, But yeah, that's all I wanted to add, is just actually hang around with people who is going to help you.
Of course. And I just want to sort of summarize it or add on to this briefly. It's even to the little things, and I know everybody watching this can relate. It's even to those little things where you've had your lunch and you just leave the dish and you say, I'll clean it later. And then you look at it in the evening, it's still there. I'll clean it in a bit. Mm-hmm. Get up, clean that dish, and you'll feel so much better that you've cleaned the dish. And those little things I'll empty the bin later, whatever. Get up and empty the bin. Get it done. Get shit done. Because I tell you what, it's going to be, whether you do it now or in an hour, it's going to need doing. And it's the same with, as I'd said, I'm dealing with clients left, right, and center. Whether I phone that client, like I said, at 1 o'clock or at 10 past 1, A, I want to be time efficient and keep to my word. But B, it needs to be done. That phone call needs to be made. And I'm excited to speak to them. How are they and whatnot? But get it done, because otherwise that phone call at 1:30 that I've got scheduled is now 1:40. And all of a sudden, it's the same. That one dish you need cleaning, that's going to affect it. It all builds up and builds up. Just get it done. Keep things as I use these words a lot, keep it as squeaky clean as you can. Just keep things rolling smooth. If that dish is dirty, go and clean it. If you need to hoover because it's dirty, and that'll clutter your mindset, oh my God, I need to hoover, I feel dirty in this room, I don't feel like, I'm just never getting stuff done, I'm looking around me, nothing's getting done. Stand up, get it all blitzed, get it all done, crack on with what you've got to do. And it's those little tweaks you make will slowly build in that discipline, and will slowly build in, and you'll be thankful of yourself for putting yourself in place. Because all of a sudden, if you respect yourself, others around you will respect you.
100%. Yeah, I totally agree with that. The more respect you have for yourself, and that doesn't just get built with, I respect myself, just saying it. There's so many different ways that builds respect for yourself that other people can see. It reflects on the outside. What you do on the inside reflects on the outside 100%. If you eat good food, it will reflect onto the outside as well. Like your physical looks, how sharp your mind is, so many different things, have a play in terms of your success and, on your mindset, especially. Like, mindset is the biggest key. Like, nobody out there, if anyone has read Think and Grow Rich, absolutely amazing book. The one thing that definitely states is, if your mindset, if your brain or mind is not built for success, you will never be successful. No matter what happens, even if you win the lottery, like, you could win the lottery, for instance, tomorrow. You could win about, let's say, 50 million. Yeah. If your mindset is not built for success, you will lose that 50 million. You will no longer be a millionaire.
There's been articles on that about people winning the lottery, and then they win some stupid amount, like 100 million, 150, and then they'll just blow it all.
Exactly.
They're called idiots. They are. They're just called straight up fucking idiots.
Yeah, 100%. And I probably see 90% of the people out there who have won the lottery have not gone above that figure. So let's say if you've won 50 million, their net worth has not grown any larger. It's actually dropped. Yeah. Whereas if, one of us won 50 million, we would make sure that 50 million turns into 150 million in some way. Short, 50 million is a lot of money. We could end up retiring with that at the end of the day, or we could set up our next generations for them to retire as well. That is a difference between, your average person and your investor. Yeah. The investor's mindset. We will make sure, okay, we just don't want to sit at 50 million. We are going to use this as a stepping stone, for instance. Yeah, we're going to use it as a stepping stone to now make 150 million, or make 50 million multiple times over and over again. Okay, we got lucky with this amount, but how do we make sure we grow this to another significant figure, or double it, for instance? Yeah, even 100 million is great. Yeah, sitting at 100 million net worth is better than sitting at 50 million net worth or zero net worth within 10 years. Yeah, what you will see now is the people who are actually putting in the work, and the ones who say they are putting in the work, you'll see that, in 5 years' time, you will see who actually did and who actually didn't. And I see it all the time. Yeah, I look around me, I see people who I started with about 5 years ago, or people who I was around 5 years ago, where they're at today compared to, where I'm at and some of the others are at today, for instance. Yeah, I see that with my own eyes. We get to see it all the time. And I've started to become more of a chilling person now. Yeah, because I can. Rather than back then 5 years ago, they were the ones chilling, and now they're the ones having to work, day and night like dogs, just to get somewhere where they should be getting already. Yeah, where they should be already.
Absolutely. And for viewers out there, don't take that as ads is sitting back doing nothing all day. Or to recap on that, ads is he's making some wise decisions, and now he can sit back and let the chilling happen. Do you know what I mean?
Yeah, 100%. It's sorry to break through that, but yeah, it's to do with time efficiency. Obviously, I've built up time efficiency over, back then. I thought, okay, if I do all of this now, in 5 years' time, I will have a lot more time on my hands, yeah, to do the things I want to do. Obviously, I'm still working back and forth. I'm not retired yet, so I'm not exactly completely chilling, but I have more chilling things to do with my time. Does that make sense?
Yeah, absolutely, absolutely. And I say to Nick, my business partner, a lot. I say, look, once we get to this milestone, I know I don't have to push on X, Y, and Z so hard, and I can ease back, and we can look at other avenues we can transfer capital into, and that will be a bit more of a slow burner, but we can sit back and watch those sort of things appreciate over a longer period of time, things like that. And once you diversify and and as ads, I'm sure we'll speak in other episodes about this, but as you diversify and you enter multiple markets, and you start to sit on an actual net worth based upon like 10% is in this, 15% is in that, you can sit back and chill and go, yeah, because this is appreciating. Doesn't matter. I've basically made myself risk averse and in an arbitrage situation where, okay, if that appreciates and that depreciates, it's okay, because I'm at a place where now I can chill and the income is cushy.
Don't put all your eggs in one basket. That's the saying, isn't it? Especially, a lot of people just pump money into one or two stocks, or even one or two cryptocurrencies. That they'll pump all of their money into Bitcoin, and they wouldn't go to Ethereum or Ripple or any of the. You have to do your research. Like I could say to you, buy Bitcoin, and somebody would say sell, but you have to actually understand why you're doing stuff. So why am I putting my money into bonds, for example? What's happening with the bond market? Why am I putting my money into these stocks? Are their quarterly earnings good? So you have to actually do your research. Don't just take based on what we're saying. You have to do your research. Always ask any investor. They diversify. They don't pump all their money into one thing. They diversify. So just because you trade Forex now doesn't mean you can't go into equities or stocks, or you can't go into bonds, or you can't go
Absolutely,
into
yeah.
cash. So you have to, diversify for sure.
Yeah, absolutely. And I also think, I'm a strong believer in this. You do create your own luck, and I think a big part of this is, and it's a reason why. And I'm sure we'll touch upon this in future episodes as well, where I did work at companies like Barclays and CBC and things like this. And I think, and people say, maybe it was just a lucky break or whatnot. I think, and that, shoot me down in the comments or whatnot. I think talent does spot talent, and the reason that talent spots talent, for example, is because they can see the traits they were putting in 5-6 years ago in someone. They can see someone who's time efficient. They can see someone who's hungry, see someone who's driven, see someone who lays out their day in front of them and knows, okay, if this goes wrong, I know what I'm going to do. If I'm not, if I can't make that meet, at least I've got a 10-minute buffer to make sure I tell X, Y, and Z that I can do that. And all of a sudden, talent will spot talent, and then doors open because you've created those opportunities for yourself. You've implemented a vast amount of discipline, time management, and self-belief, and all of a sudden, you get lucky. Okay, yeah, you get lucky. It's not luck. You create your own luck, and I think the opportunities will arise because you've put those endless little bits of micromanagement in that builds up to one big great path.
Yeah, I absolutely agree with that. In fact, there's a saying that the goddess of good luck only blesses the hardest worker. Yeah, so eventually luck will be on your side. The harder you work, the more work you put in. Yeah, all you need is that tiny bit of luck. Yeah, mixed with hard work as well. Yeah, to go in the right direction that you really want to go in. But luck without the hard work, it goes the opposite wrong way, as we were mentioning, and as Mark said as well about people who won the lottery. They just got luck, but they've never put in the hard work. What happened to them? Back to ground zero again, or hardly anything left. Whereas the ones who have worked hard and get hit lucky, let's say somebody's working hard in a hedge fund firm, for instance, and then suddenly they get a big contract or a big investor on board. They deserve that big investor, because they've worked hard on their way up towards that investor, for instance. Because now they're able to handle it because they've put in the hard work, they put in the hardship, they know how to deal with a big investor when it comes their way. It's never a negative for them. It's always a positive. Yeah, regardless if they can handle it or can't handle it, they know the hard work that they have put in to get up there in the first place, they should be able to handle it, regardless of how hard it could be. Yeah, I know people who have been put in very tough situations, but have still managed to walk their way out of it. Why? Because, firstly, they have the mindset of never giving up. Secondly, they have put in the hard work, which, deserves definitely a lot of credit. Yeah. And thirdly, they have the mindset to always continue going no matter what. They're going that extra mile, in fact. And that's where, I made the most substantial gains in the gym, to be honest with you. I made sure every single workout, I went that extra mile. If I was reading a workout, off the internet, for instance, or somebody telling me, okay, do this amount of reps, do this amount of sets, I would make sure I slightly go a bit further than that. Yeah. If they're saying, 10 to 12 or 10 reps, I'll do 11. Yeah. If they're saying doing 3 sets, I'll do 4 just to make sure I break down that muscle. Yeah. Not taking it too far at the same time, but make sure I break down that muscle, because I want to make sure that, if they're getting these results from that, if I go that slightly bit extra, that take that extra mile, I will make sure that I will get the results that I desire. And it's nothing, and I don't settle for less.
100%. And I live by this. An old mentor of mine drilled into my head, used to say to me every time I shook hands with him, fortune does favor the brave. And if you're brave enough to take that extra step, and you're brave enough to put yourself in situations you don't want to be in, there's endless situations where I feel like I've had my back up against the wall. There's no one to support me. I've got to make these decisions. I've got to take these 50-50s. I've got to make some sort of decision that if it goes my way, okay, cool. If not, I'll learn. But there's many people out there that will go, if it doesn't go my way, I'm going to give up. Or, okay, cool, I'll just, and it's the same. It relates to everything in life. And what you've got to pull it back into, and again, not look too far and just manage what's around you at the minute, is as long as you're doing your best at all times and you're learning from both positive and negative outcomes, you will always, no matter what, be on a learning curve and on a progressive rate of becoming a better person, a better investor, a better trader. And again, it'll come back to, you will respect yourself more, because you'll come out of these negative situations, look back and go, handled that well, and I'm proud of myself. And you know what? Maybe I would have done this a bit different, or that a bit different, but there we go. I've learned, and I will be solid next time I come into any situation, even remotely similar to that one. I'll know how to articulate myself and adequately deal with it.
Yeah, absolutely, I agree. And it helps you build or grow, let's say, into a better person. And I'm all for that. Anything that I can do, if there's multiple choices I have on my hands, I will make sure that I go down the route where I gain the most growth out of it, for instance. As long as I will grow into a better person by doing that, in some sort of way, I will make sure that I'd rather choose that than obviously, let's say, watch a movie, for instance.
Mm.
Yeah. And, it all comes back down to your personal choices. We all have choices at the end of the day, and some of them are absolutely free. Yeah. It's free to pick up a book and read it. Yeah. It's also free to watch a TV. Yeah. It's free to put that extra scoop of sugar into your coffee. Yeah. All these choices are free. Now, we have gone on about that for a little while. Anything else before we move on to the final topic?
I'd say I'd recommend a book. The book that actually helped me a lot is by Tony Robbins. It's called Awaken the Giant Within. I'm not sure if any of you have read it, but it's an amazing book. I definitely recommend that. And I can't remember the other Tony Robbins. It's about some investment one. I think it's Money Master of the Game. I think.
Yeah, Money Mastery.
Yeah.
Money Master the Game. Yeah.
Yeah,
I've
that's
got
also
that book. Wicked book.
Yeah. So those are the two definitely I'd recommend. If you're going for a hard place or you need some type of like direction and you haven't got somebody to talk to, like obviously my network weren't very like orientated towards business and stuff. So I'd go to a book to help me, to guide me in some type of way. And Awaken the Giant Within was the one for me, for sure.
Yeah,
Wow.
To summarize it for me, I'd just say for everyone watching now, even pause this podcast and then click play when it comes to you. But sit back right now and think, what have I been putting off? Or what haven't I done that I've been needing to do for a while? Or what do I know that I need to get done? But I know I've got about a week to get it done. So I'll leave it till the 6th day, 6 days from now, the day before it needs doing or whatnot. What can you right now know that you need to get done or that you've been putting off that will just clear up time for you and clear thinking and a clear thought process? Things that you're putting off and things that you're just sort of shrugging off and really not implementing that discipline. What can you do right now to better yourself? Implement it, get shit done, move forward.
Yeah,
100%. I totally agree. And moving forward onto the final one, and we're going to finish it off with this. So, and you know what? That topic is absolutely amazing. I could go on about it forever and ever and ever. Like, mindset is my thing. I've always believed, unless we build a successful mindset, success will never come our way. Yeah, regardless of whatever we do, like we said, we could win the lottery. That's not really success, is it? Yeah. But moving on finally, and this has been sent in by viewers as well. What do we see taking place in February? So I'll let Mark start with that.
So
based on data, based on...
No, I think, to be honest with you, I think that at the moment, the US, the pound, Aussie dollar, I think Aussie dollar is the one to look out for because of the Chinese and Japanese demand for iron at the moment. Obviously, it's slightly decreased, hence why it's seeing a slight pullback in AED USD and a lot of AED pairs. But demand should start to increase again soon. I think it's starting to increase now, actually. That's why we're seeing a sort of a big push up for Australia. But I think at the moment, from a fundamental perspective, my views are still the same. We're short the dollar, especially. We're shorting the pound, obviously, against commodity-based currencies. We're long GE for sure. I think, obviously, a predictions came out by Goldman the other day about 1.4 to 1.45 for GE. And that was basically what I was aiming for as well. I've been saying it for months. Bonds as well, 1.5, which intrinsically also increases the dollar's value. But you can't just use that as a buono endo type thing that if bonds go up, dollar has to go up. You have to understand the macro perspective of what is happening in the US at the moment and what is the data telling you. Obviously, if you don't understand the data, that's fine. You can always ask me or ask Drew, or just research yourself. I'd personally research it because you can't take my word for anything. But yeah, I'd say at the moment they're all pulling back, but I think we're due some nice swings very soon. But yeah, if you go onto the charts now, you'll see GA, GN, USD, CAD all pulling back. But then, yeah, we should start to sell off soon, I think personally.
Week leading into the end of January, sorry, and heading into February, I think the charts are setting up for some beautiful swings. I know myself and ads get in and out of these swings as they continue their path, but as long as you have a directional bias and you understand where you think price will end up at, and you think fundamentally which side of the pair is stronger than the other side, you can articulate yourself perfectly. And I think it has been a very messy end to the month. Seeing things like pound yen rocket, seeing things like pound Aussie and things like this. And as we've discussed in the weeks prior to this, places that is very expensive to buy the pound against the yen, and fundamentally it wouldn't make sense, so to say, at the minute. So I think heading into February, the charts are, so ending January, the charts are fairly messy, fairly wicky, fairly aggressive. But when we see price pursue the direction the data and fundamentals say it should pursue, and then we start to see some move off and pull back, move off, pull back, move off, you'll see that price will play out as it should. And I think heading into February, we might see this bull run on gold. We might see it pull back to those deeper levels of late 1700s. Who knows? But what I do think is long term, I am bullish on gold, especially silver. I'm real bull on silver, and I think now, is where price is actually putting us in a position that we could optimize on it. And I think seeing things like the weak dollar come into play, seeing things like the pound suffer and whatnot, I think that we will see those predictions happen in due course. February might be the one where we start to see some aggressive push-offs.
Yeah, totally. I agree with that. And you know what? These two, Drew and Mark, have heavily emphasized Forex. So I'm going to, move away from the Forex topic. In fact, I'll quickly recap it right now. But I have seen a very choppy end to this week and to this month. In fact, didn't expect it to be like this, but it is what it is. We are always prepared for every kind of situation. And I'm glad, in fact, myself and Drew are more, let's say, scalp traders. Not cussing any swing traders out there, because everyone has their own style. But we would rather get in and out of the markets than sit out the choppy period. So if we notice something choppy, we'll be out of it altogether. Yeah. So it all depends on, what kind of trading style you have, what kind of, how it works around your lifestyle. Obviously, some swing traders get in before the whole move has taken place, which is even more beneficial than scalping the whole move. Yeah. They get in before the move has taken place, ride the whole move out, caught hundreds and hundreds of pips. So, everyone is winning on both sides. But yeah, when it comes down to choppy markets, I'd rather stay away and not be in it at all, even, not be in it from days before, weeks before, just rather not enter altogether. So glad to be a scalper in that sense anyway. But yeah, moving forward in terms of crypto, and this has been suggested by a lot of other people and everyone else as well. So crypto, what do we see taking place in February? So as we all know, XRP is under investigation at this moment of time. Ripple Labs is under investigation. Trading has been suspended on nearly every single platform except for, I believe, crypto.com. The other one is BitPay, and I can't remember the third one that I saw it still available to trade on. So if you XRP buyers are, or investors still wish to buy some XRP, go to crypto.com, go to BitPay. Once the third one comes out, I'll type it in the the description below anyway. But yeah, check out those. If you're still into XRP, you can continue buying and selling on those platforms. It's completely up to you, no worries. Whereas Ethereum is strengthening and strengthening and strengthening over time. It's just becoming stronger and stronger. And I can see more market cap being added. It's, Bitcoin has dropped, not a heavy amount, but definitely a significant amount to where it was, 2 weeks ago, for instance. Bitcoin has dropped. It hasn't dropped halfway, but it definitely has dropped at least about 20 to 30%, yeah, around that figure. Whereas Ethereum has hit its peak and is currently just still trading at its peak, yeah, around that price. It's still trading around the peak price and hasn't dropped at all in any way, yeah. The lowest I saw it in the past couple of weeks was 800, nothing too low, for Ethereum. I've seen prices of 150s before. I've seen prices of even 70 before. Yeah. So to see this hold its ground compared to every other crypto out there is definitely a very strong coin and something to look into. So for those of you who just want a stable, long-term cryptocurrency to invest in, I would say Ethereum all the way. With Bitcoin, where do we see that taking place now? More and more Bitcoin is going into circulation. And in fact, before we even, you know, started this podcast, we were talking about it together, myself, Mark, and Drew. Yeah. More volume has been pumped in. More people are buying crypto. More people are buying Bitcoin now than ever have before. Like, we've seen it. Drew has seen it. Mark has seen it. Even myself, I've seen it. Yeah. I keep getting calls, where can I buy this amount of Bitcoin from? How can I buy this amount? Can I buy this amount? Yeah, all sorts. People are buying so much Bitcoin now than they ever have before, ever. And why is that? Because it's even more usable. Yeah, more and more places are starting to accept it. More and more places are using Bitcoin. More and more people are using Bitcoin as a form of transacting nowadays. Rather than being tracked, they would rather just, even if it's for legal reasons, yeah, they just don't want the government or anyone to see their transactions. So what do? They put it in Bitcoin and then send it over in Bitcoin to somebody else. Yeah, just a simple transaction. Instead of my bank account to Mark's bank account, I'm gonna buy Bitcoin and go from my Bitcoin wallet to Mark's Bitcoin wallet. It's so much easier, so much simpler, so much safer. Yeah, less fraud can take place in that sense as well. So it's just becoming more norm nowadays to use Bitcoin. And what did we just see announced yesterday? Visa. So Visa, I don't know if you guys knew this, but Visa pulled, or let's go from the beginning, for instance. Yeah. So Coinbase had a partnership with Visa, yeah, to give out cryptocurrency debit cards. Then I think it was around the time where the dump happened, where everyone, despised cryptocurrency. And that is when Visa also pulled out or revoked their partnership with Coinbase. Now, yesterday, they have just announced its re-partnership with Coinbase. Yeah, so it's coming in soon again. What does that show? Visa, one of the biggest and largest forms of payment out there in the world, payment processors are back on with the Bitcoin network and back on with the whole cryptocurrency network in general, because back then there was only, I think, only 2 coins or 3 coins you could buy. I think it was Bitcoin, Ethereum, and Litecoin, yeah, on Coinbase. Whereas now, there's way more than 3 coins available to buy. So you don't just need to use your Bitcoin debit card for Bitcoin. You can use it for Ethereum, XRP now as well. Litecoin, Dogecoin, so many different coins. It doesn't just have to be XRP or Bitcoin, should I say? Mark, were you going to say something?
No, I was laughing at you said Dogecoin.
Yeah, Dogecoin. What is it? Why do you say it?
I don't know. I to be honest with you, I only heard about.
I don't want to call it doggy coin.
No, I only got into Dogecoin. Well, I bought like it as a joke because it was like a TikTok trend. So I thought, well, if a lot of like retail traders are pumping it, I might as well join.
Yeah.
Although I wouldn't recommend doing that, by the way. That's why I only put like a tiny amount. But it rocketed. Like today, it's up like 90%, 100%.
Wow. Yeah,
it's just like a joke coin.
Skyrocket.
Yeah, it's just like a joke coin, like a pump and dump kind of coin.
Yeah.
There's no like intrinsic value, like use for Doge. It's just like it's a meme coin, isn't it? So yeah, only invest into coins that have like value behind it.
All of us have a debit card. We all go out, we buy meals on our debit card. We all you buy a car on your debit card, whatever. And this is a big transition to the future with regards to you're going out for a meal and you're buying it on Bitcoin, for example, these debit cards and whatnot. And that will confuse some people. And what will actually happen is, say you use your crypto card to buy food, so Visa, for example, would send the Great British Pound value of that to the restaurant or whatnot, and they will charge you Bitcoin. So it's, you're still purchasing things in fiat currencies, but it's a way of you spending your crypto, if you like, if you're putting it onto a debit card. But not only is that emphasizing how much the future could change, but also, how much adoption is going on. As Ad's mentioned, there's so much things coming back into play. And over time, as people do start putting more emphasis onto Bitcoin and whatnot, and they start to diversify by holding a bit of money in banks and a bit of money in crypto and whatnot, that will just generically over time tick up the value of these assets. And we're only seeing that come into fruition right now, really. And think of 20 years from now, when having a debit card or a crypto debit card is the running thing. Everyone has one, for example. You have to think of these terms and the possibilities they could evolve to, in my stance anyway.
Yeah, 100%, and I totally agree. The more it's widely used, the higher it's going to go in value. Yeah, and there's a limited amount of coins, which is only 21 million coins, 20 in circulation, because 1 million Satoshi is keeping for himself. So yeah, only 20 million coins that will ever be in circulation, and more and more of it is being held or used or kept or bought, for instance. So that only leaves a smaller portion for the rest of the world to keep on buying and still buying over time. Also, the mining difficulty is looking to increase again in the next 3 to 4 years as well, once a certain number of blocks is mined. I can't remember right now at the top of my head, but I had it written down somewhere when I was doing my research. So that is going to increase the coin even more in value. Yeah. So when it comes to crypto, basically, if you're watching this right now and you haven't invested in crypto, don't worry, you're not late as of yet, because in 5 years' time, you will be looking at Bitcoin and be thinking to yourself, why did I not buy at 22K? Yeah. I know some people are looking at me and thinking, why didn't I buy at the same time you bought in 2014? But still today is still not late, because if you compare it to 5 years' time from now, you will actually be looking back and thinking, I wish I bought Bitcoin at 22K. Now it's like 100K. Yeah. Imagine I had bought it at 22K. Yeah. Where I would be right now, I would have quadrupled my money by now in 4 years. And if somebody is telling you right now that there's a chance for you to quadruple your money in the next 4 to 5 years, are you telling me you're not going to extract all of your savings right now and try to quadruple it as much as possible? Of course, we all would, right?
That is not financial advice, everybody. By the way.
Yeah. Nah, not financial advice, by the way. So yeah, finalizing, anything else that you guys want to say in terms of February, what we could expect? Well, from us, I can definitely say you can expect a lot more coming from us. These podcasts are going to get so much more interesting, especially now, Drew has been requested to keep coming back and back and back. We're going to make sure we hold him here, and not let him go anymore. Capital Convos. We might have our third member of Capital Convos permanently, Mr. Drew. So, thank you so much for all the value you do provide with us.
Absolutely blessed. No, it's okay. So it's a blessing, honestly, and I'm thankful to be here. But I think heading into February, be aware of where we close the month. Look at the monthly candles on the charts. Look at the psychological aspect, like the round numbers, and let's see where we're rejecting from, and bringing it back to that mindset. Implement your discipline. Stay on your toes. Keep pushing forward as much as you can, and I'm sure you'll catch us all soon with some more gems to drop.
100%. Yeah. Anything else, Mark, before we wrap this off?
We're all good.
Wicked. So once again, thank you all so much for plugging into Capital Convos, episode 6 or 7. Yeah, one of those two. We're 7. Yeah, 7. That's it. 7. Wow, we are already on 7. I can't wait to look back at some of our episodes once lockdown is over and we're all sitting together finally, and we're in a nice studio back to where we were before. And we're looking back at some of these and we're thinking, you know what, we still pulled through on our podcasts, even though we didn't really have the resources to do so. We haven't got professional cameras in here right now. We're not even using professional mics in here right now. I'm still using, my old iPhone bloody headphones, but we're still making do. But regardless of whatever, you know, situation we are in, we are still making do, and that's exactly what we expect all of our viewers to do as well. Don't worry what kind of situation the whole world is in right now. Yeah, it's not just yourself, it's the whole world. We are in this together. So do not worry. As long as you keep pushing forward every single day, making do with what you have, yeah, be resourceful. And that's exactly what we are also trying to do as well. And as we have seen over time, slowly, not overnight, but over time, we have grown to where we are today. And we are nowhere near where we want to be right now. We want to be on at least, you know, 300,000 subscribers, you know, hundreds and thousands of viewers. And I'm sure that will come as long as we stay consistent. And the more and more lives we are able to add value to, the better it will be, you know, for ourselves and for you guys in the long run, because you could keep plugging in and getting more and more advice or more and more knowledge, you know, than you ever knew before. So yeah, let's wrap it up once again. Thank you all so much for plugging in. This has been a really, really great session today. I really enjoyed it. I always enjoy it, especially with Mark and Drew. Thank you guys for joining us, and take care. Catch you guys in the next one.
Take care.
Take care, guys.